Namaste. Today in Know Your Funds, I'm going to tell you about small cap funds. Now, what are small cap funds? Well, these are mutual funds which invest in small cap companies. SEBI, as per its guidelines, has bifurcated companies listed on stock exchanges into three categories: large cap, mid cap, and small cap. Well, large cap companies are the top 100 companies by way of market valuation. From 101 to 250 fall in the mid cap bracket, and 251 onwards fall in the small cap bracket. Now, small cap mutual fund is a fund which invests in the companies which fall below the 251 mark. Correct? They are basically uh, based on the capitalization of a company, the smaller companies are termed as small cap companies. Now, historically, it has been seen that small cap funds tend to outperform large cap funds. Yes, small cap funds have outperformed large cap funds. I said that again because that is what is true. One of the basic reasons is the heavy leverage, the capital intensive nature of large cap companies, the long gestation periods, say in large cap companies in power, infrastructure, so on and so forth, makes it very difficult for the companies to go or to turn into green, and it takes a long time to break even, correct? But that is not the case with small cap companies. Why? Because they tend to uh, be part of an industry which is less capital intensive. So that is why, performance wise, if you see, small cap companies tend to make profit earlier than large cap companies. One more thing is the adaptability and adjustment factor. Now, as I told you, since large cap companies are more capital intensive, adjusting to the changing market conditions for large cap companies takes time. But that is not the case in small cap companies. So exactly, since they are quicker to adjust and change course of their business depending on the change in market conditions, their performance is percolated, is seen in the small cap funds as well. Correct. So these are basically some of the reasons why small cap companies, small cap funds tend to outperform large cap funds. Now there is a checklist that investors should check before investing in such funds. Now, the first of those checklists, the first point that I want to tell you in that checklist is check for performance, check for historical performance of the fund. Well, historical performance does not guarantee future returns, but it will tell you the consistency and the rate at which returns were generated in a particular fund. Consistency here is more important than how high the returns the fund generated. Was it able to consistently give returns? See, there, all of us know that market is cyclical in nature. It is not always that the market is in an upward trend. Markets do tend to become bearish. How has the fund performed in a bearish market? Well, small cap companies tend to perform good when the market, during periods of boom. But what about the companies during bearish periods, during periods of lull or depression, recession? How have the companies performed? Very important to see that. Correct. So check historical record of the fund. Then see how much exposure would you give. Why small investing a certain portion of your investment in small cap is beneficial? Why? Because of the 2x and 3x returns that these funds generate. But you cannot put all your equity related investment in small cap funds. Generally, the ratio that you should invest in equity related funds is 70%, 60 to 70% in large cap, 20 to 30% in mid cap, and a smaller portion of 10 to 15% should go in small cap funds. Why? Because they tend to be more riskier as compared to large and mid cap stocks. Correct. Then one more thing that you need to check is the liquidity ratio of the fund. Now CRISIL, which is a credit rating agency, publishes the liquidity ratio of different funds. Now what this ratio basically means is how soon will the fund be able to liquidate its assets in case of heavy redemption in the fund. Now this ratio, this duration, liquidity duration for large cap companies tend to be around 1 to 1.5 days. For mid cap companies, it ranges to somewhere around 10 to 12 days. And for small cap companies, the liquidation period is nearly 20 to 25 days. The smaller the liquidation period, the better it is for investors from an investor's point of view. So check that liquidity ratio as well. Check the fund management. Who is the team that is managing the fund? Because see, generating consistent returns from small cap stocks is an art in itself, and the more the experience the management team has in managing small cap funds, the better it is. How stable is the management team which is managing a particular small cap fund? Very, very important. Yes, so check the fund management of a particular small cap fund. Also, what you need to check is how the fund has performed in bearish markets. As I told you, small stock companies perform well when there is boom in the market, but during periods of bearish market, how has the fund performed? If the fund has been able to, if the fund management has managed the fund well and mitigated the risk in times of bearish sentiments in the market, then that should be one of the criteria for you to choose a particular kind of fund. Correct. Lastly, taxation. See, now this is a equity fund. So taxation for equity funds is based on the period of holding. If you hold a particular fund for less than 1 year, then and sell it within a year, then you will be charged short-term capital gains tax, which is at 15%. If your holding period is greater than 1 year, then any gains that you make above a lakh of rupees will be charged 10% long-term capital gains tax. So this is what was the fund and what you should be aware of before investing in this fund. Thirdly, who should invest in this fund? See, if you have an appetite for volatility, if you have that risk-taking capacity, if you have a long holding period, only then think of investing in small cap funds. Why? Because see, normally companies that are small scale in nature are less when it comes to diversification. So the risk element involved is higher. Correct. They are the companies, since they are not diversified, they face a larger scale of risk as compared to large and mid cap companies. So if you have an appetite for risk, if you have a period which is almost a decade or so that you can hold into this particular kind of fund, then think of investing in small cap funds. Correct. But if you want returns, if you want 2x 3x returns in your portfolio, then this is a fund that you cannot ignore as well. So think about it and then decide whether to invest in a small cap fund. If you have any queries, as usual, please feel free to comment below the video and I'll be as usual happy to help you. Until tomorrow, see you, stay safe.